I'm Darius McDermott from Fund Calibre, and today I'm joined by Rob Brewis, who is co-manager on the elite-rated Aubrey Global Emerging Opportunities Fund. Rob, good morning.
Good morning, Darius.
So look, the fund is designed to tap into the growing consumer opportunity in emerging markets, with over half the portfolio in consumer discretionary and staples. Tell me briefly why you love this theme so much, and if you could give us one or two examples of this theme, that'd be great.
Sure. Yeah. Well, I think the growth of the consumption in emerging markets is one of the sort of great and enduring sort of long-term growth stories in the planet, really. But I think what is very important is to look in the right places. And I think the reason I say that is because it's a very varied universe, and consumers in different places want different things. So if you take two of the big countries in emerging markets, India and China. GDP per capita in India is $2,500 a head, something like that. Whereas in China, it's now $14,000 a head. Clearly, with these different income levels, people are going to want different things with their incremental earnings growth, like their incremental wage increases. So, I mean, just to give you some examples of those, India is a much more basic level of things. So, it might be it's a first bank account, or it's a first apartment, or even something as simple as a sort of packaged food or beverage. I mean, one example we have is in the portfolio is Baron Beverages, which it bottles Pepsi and sells them across India. And the basic story, long term, is that servings per head in India are 50. In Brazil, they're 500. In the US, they're 1,500. So, that's a great backdrop to have. I mean, there are lots of other good reasons why we like Baron Beverages, but you're starting from that premise. I mean, the flip side is somewhere like China, which is much more advanced. There we're looking at things like travel when they're allowed, healthcare, wealth management. East Money is one of our holdings, is one of the larger. Is a mutual fund, for example. So very different things. In other words, you've got to keep looking in the right place.
Yeah. Well, let's focus our attentions then on those two big markets in global emerging markets, which are China and India. Maybe we'll have a quick go on China first. So China is still targeting a zero COVID policy, and several cities have been locked down on and off throughout 2022, something thankfully we no longer have to endure. How is that affecting consumption, particularly when that people are presumably less able to consume than they would if they were out and about? And do you see that policy changing, or is that sort of their hard and fast way of going about it?
Yeah, it's a tough one. I mean, just to take a step back, I mean, one of the big drivers we see in the past decade or so in China, for consumption in China, has been the fact that the very high savings rate that we all talk about a lot in China has actually been coming down, as really, I think, for a number of reasons. But firstly, it's a sort of generational change where there's a younger generation of consumers who are much more willing to spend. But clearly, as you rightly point out, COVID has put a complete end to that trend. And for obvious reasons, people have been saving much more and spending much less. And that, that's clearly been a headwind to our consumer companies in China. Now, one thing you can say, though, is that there are still areas of growth even in that environment. I mean, if you look in the right places, you look at electric vehicles, for example, which are growing extremely quickly. BYD, one of our holdings, revenues were up 60%, I think, in the first quarter. Other areas like local brands in China are doing very well versus foreign brands, particularly in certain areas. So Proya Cosmetics, a local Chinese brand, again, revenue growth of over 30% in the first quarter. And both of these have continued even through the lockdown in the second quarter. So there are areas of growth if you look in the right places, but the ultimate thing that we will be looking for is a sort of post-COVID recovery. There's no sign in the zero COVID policy being relaxed, so we're not holding our breath. I mean, it will happen eventually. I mean, these things, we take a medium-term view on our companies, and it will happen eventually. And who knows? I mean, can you imagine if a revenge travel emerges from China at some point in the next few years? It's going to be very interesting, but obviously that will take time. We have to.
And maybe then just a quick touch on valuations on those types of names. And I don't want you to pick on any, but just broadly, have valuations reflected their short-term outlook?
Yeah, I mean, it's a very good point. I mean, I think that's we've seen the Chinese market recover a bit in recent weeks and the last month or two, and I think that's partly because valuations have achieved levels that we've rarely seen, particularly for decent, high quality growth companies that we look at that have underlying growth dynamics, even if they're a little bit suppressed at the moment. So I think it's a very interesting time to look at some of these Chinese companies, which as I say, we don't know quite when the sort of the background. The background will improve much, but the fact is that that's very much reflected in the prices at the moment. So very interesting time for a lot of these stocks.
Great. So then let's go back to India. Again, another favoured area for you, a big percentage of the portfolio, circa 40% in India. Like a lot of countries, though they're expected to raise rates, we know that there's a concern about food price inflation and, in fact, delivery of food because of poor harvests and concerns around Russia-Ukraine. How are your holdings in India faring up, and do you have any short-term worries, or is it again a long-term game?
Yeah, I mean, actually, in general, our holdings have been doing extremely well in India. They're focused in the right areas. The kind of businesses we own tend to be, they're tending to be gaining market share. They're the more organised players that are taking share from the unorganised sector, and they have pretty strong pricing power. So, most of them have been able to pass on most, if not all, of the price increases. But the one thing that's for sure is that there's been a derating in some of these stocks over the last 6-9 months as interest rates have risen in India, as they have everywhere in the world. But I think the longer term point I would say is that we think that India is getting to grips with its inflationary past, if you like. And I mean, I know it's unusual times, but even in India, the actual inflation rate is below the US and the UK at the moment, which is obviously unusual. But we also think it's in a much stronger position. Previous times that oil has had a rise like this, India has really struggled. I think its external accounts are much more resilient than they have been. The food pricing point you make is interesting because I don't think people quite realise that. India is by far the largest rice exporter in the world. I think it probably will be the largest wheat exporter in the world quite soon. We've had the monsoons are still important in India, and we've had a number of years of very good monsoons, very good growing conditions. But the fact is that if you could picture a typical Indian farm, this has really all happened before they've even started to mechanise and upgrade their farms. So imagine what sort of food production India could have. And you've obviously got to remember there are 1.4 billion mouths to feed as well. So that doesn't sound too inflationary for me from a food price point of view on anything other, and you look further beyond the current months or so. So I think India's in a reasonably probably a much better position than people really think.
So look, you've got lots of markets you can invest in, and we've touched on the two big ones where you naturally have two big portfolio weights. But outside of India and China, what other areas are interesting you, whether it's from a growth or a valuation perspective? Where else are you focusing some of your time and efforts?
Yeah, I mean, it is a good point. And one of the, when we look at our sort of potential universe of stock that in our consumer world, the vast majority of them that come up still are in India and China. There's a lot of opportunity there, but we are always looking for opportunities elsewhere, but we are very selective. I mean, at the present, the biggest market exposures we have are outside India and China, Vietnam, India, Indonesia, and Poland. Interestingly, Poland's is an interesting one. It's not it's not topic of the moment for emerging market investors, but we've had a very successful holding in a company called Dino Polska for 4 years now, over 4 years, and it just happens to be an extremely good business. It's one of the country's leading retailers. They operate proximity supermarkets, so sort of medium, small-sized towns and villages will have a Dino Polska store in there. And it's grown revenues at 30% a year for the last 6 years consistently, and it's still got a lot of Poland to cover. So it's just a really good example of a company that if you find them and you know where to look and you know what you're looking for, there's really interesting opportunities everywhere.
Rob, thank you so much for your time this morning talking about the challenges of emerging markets, but also the opportunity and potential valuations in some of those areas. If you would like to receive more information on the Aubrey Global Emerging Markets Opportunities Fund, please do visit fundcalibre.com.